A new survey indicates about a quarter of Canadians are losing their confidence in the stock market and looking to cash out. The study by finance comparison website Finder indicates the reasons behind these concerns stem from market volatility and budget restrictions. This comes as the rising cost of food and gas continues to impact Canadians and businesses amid rising interest rates. But is cashing out on investments the answer here? All right, well, joining us now to talk more on this is Brendan Caldwell, Director of Caldwell Securities Ltd. Brendan, welcome back.
Nima, always great to be here. Thank you.
Always great having you, Brendan. Now, according to this survey, as we mentioned, a quarter of Canadians have lost their confidence in the stock markets and want to cash out on their investments. So what are your thoughts on this mindset, Brendan?
Well, they should, by all means, cash out. But let me qualify that just a little bit. Nothing really bad has happened to the stock market, nothing tragic. It's down a bit, 10% maybe, depending on which market you're talking about. The US market isn't down as much in Canadian terms because of our currency not being terribly strong. Prime Minister Trudeau, call your office. But if you're really feeling uncertain about the market now, if you're really worried, then sell a little bit. 10%, or you said a quarter of Canadians were uncertain, sell a quarter, sell something. If you're genuinely really concerned, because I can tell you what, that will make it easier to do one of two things. Either the market keeps going down, in which case you will feel that it was smart of you to have sold something, and you'll be able to sell more, and it'll make the next decision easier. We've talked about that logic when it comes to the buy side, but it applies to the sell side as well. And two, if you're wrong, if October, which is traditionally a tricky month for the markets, going back to 1929 and then again in 1987, once you're at the other end of October, you might find that the market actually goes straight up from here. And if you still have 75 or 90% of your money still invested, well, you'll be glad you didn't cash out altogether. Generally, I find that when investors capitulate, decide to cash in, particularly nervous individual investors, then that tends to signal the bottom of the market. So if you're really nervous, or if you need money 3 months, 6 months, 9 months from now, sure, sell what you need, raise the money you need now. Nothing really bad has happened yet.
Now, another thing to consider here is that we're in a bear market right now, Brendan. That's similar to something we've seen in 2020. So how do you think this is impacting the mindset of investors?
Well, I think this is a very different situation than 2020 for a bunch of reasons. 2020, it was a bear market in as much as the market was like we'd never seen before. The market was at all-time highs, then COVID, and we cratered for 2 months. The market went down until the middle of May, and then went on a raging tear for the next 18 months, fueled by low interest rates. Flash forward to the present, we don't have not as low interest rates anymore. Markets are nervous about how high rates will go. And as I'm sitting here right now, I'll tell your viewers, I have no idea how high they're going to go, probably higher, as central banks around the world are attempting to combat inflation. But it's a very different scenario. And where 2020 was a short, sharp drop, this has been a bit of a death of 1,000 cuts, as people have not really wanted to believe this or that or the other scenario, whether it's inflation or interest rates or Ukraine, is as bad as all that. Which is why I say, if people really are feeling down about this, do something, but I wouldn't do everything. I wouldn't sell everything right now today, but if you're really nervous, I'd sell something.
All right, Brendan. Now, stock market volatility, it makes sense that it's making investors a little uncomfortable, especially with the rising interest rates, thoughts around a potential recession. So some may think that market timing is the answer. What are your thoughts on that, Brendan? Just about a minute left.
All right. People never talk about volatility when the market's going like that, upwards to the right, and people are making money. They never talk about the ups and downs in terms of volatility. Volatility seems to be universally a euphemism for the market going down. And yeah, market going down do make people nervous, but the actual volatility, the actual ups and downs, this time-based approach that I'm advocating, either for selling or for buying, will, I think, stand you in better stead. Because if you haven't got anything invested right now, this is an ideal time to get started with something. Even if it's $1,000 and then do another 1,000 next month, you will find yourself in better stead as you accumulate wealth, because you can take advantage of the volatility. You can take advantage of the ups and downs, whether you're a buyer or a seller. We get trapped, investors get trapped in the mental game of trying to be right. And you don't always have to be perfectly right, because none of us ever will be.
Always some great advice. Brendan, thank you again for your time today.